Hi everyone, my name is Hannah Keese, and today I'm going to be talking about a recent finance news story involving Amazon and a major bond issuance. Specifically, that Amazon is planning to raise around 37 to 42 billion dollars through corporate bonds. This is a really interesting example of corporate finance. In real life because it shows how these large companies raise capital to fund major investments. And in this case, Amazon plans to use the money mainly to expand its artificial intelligence infrastructure and cloud computing capabilities. So let's get right into it. So to start off with a quick summary of the article, Amazon again is planning to raise between 37 and 42 billion dollars by issuing corporate bonds to investors. Bonds are essentially loans that investors give to a company, and the company agrees to pay interest over time and repay that principal later. The funding from this bond sale will mainly support Amazon's continued investment in AI tech and its cloud computing platform. Both of these areas require massive investments in data centers, servers, and computing infrastructure. Another interesting point from the article is that investors showed a really strong demand for these bonds. That means a lot of investors are just super confident in Amazon's ability to repay the debt and continue growing. Because of the size of this deal, it's actually one of the largest corporate bond sales we've seen in very recent years. So, overall, the situation just shows how major companies use these financial markets to raise capital when they want to invest in these like huge long-term projects. This story is also interesting because it connects directly to several key corporate finance topics that we've covered in this class. One of the main ones is capital structure, which refers to how a company chooses to finance its operations through either debt or equity. In this case, Amazon chose to raise money through debt by issuing bonds rather than issuing that new stock. One reason companies do this is because issuing new shares can like dilute ownership for existing shareholders. By using debt instead, Amazon can raise the capital it needs while allowing current shareholders to maintain their ownership percentages. And debt financing can also be like super attractive when a company has a really strong credit rating and can borrow at a pretty low interest rate. Large companies like Amazon often have access to cheaper borrowing costs because investors see them as like a relatively low risk. This decision can affect several different stakeholders. First are shareholders. For investors who already own Amazon stock, this could potentially lead to a long term growth if the AI and cloud investments do pay off. However, on the other hand, taking on more debt also increases financial risk because the company now has those additional obligations to repay that debt. Management is obviously another important stakeholder. Amazon's leadership now has the responsibility of using this capital effectively and making sure the investments um, generate enough returns to justify all this borrowing. And employees obviously could also be affected in a positive way. So expanding AI and cloud infrastructure often means building new data centers and expanding technology teams. And this could obviously create more job and growth opportunities within the company itself. So this financing decision doesn't just affect the company itself, it impacts multiple groups that are connected to the businesses. This news also has implications for the broader financial markets. First, the strong demand for Amazon's bonds shows that investors still have a lot of confidence in large tech companies. And second, it highlights just how corporate bond markets play a really, really important role in funding innovation. Companies often rely on these markets when they need to finance large investments in tech, infrastructure, or expansion. Another important trend we're seeing is that artificial intelligence is becoming one of the biggest drivers of corporate investment right now. Many companies are investing just billions of dollars to stay competitive in this AI space, and financial markets help provide the capital needed to make those investments possible. So, just to bring this all to a conclusion, Amazon's bond issuance is a great real world example of just like how corporate finance works in practice. By issuing bonds, the company is able to raise like billions of dollars to invest in future technologies like artificial intelligence and cloud computing. This decision also highlights the importance of capital structure choices since companies have to decide like whether to raise money through debt or equity. The outcomes of these decisions can obviously affect shareholders, employees, management, and even the just like the overall broader financial markets. So, and this story just shows how financial markets help support innovation and long term growth for major companies like Amazon. So, yeah, thank you guys so much for listening and have a great day.